Well, indeed, good afternoon. Welcome. This is KTN Business Today on this day, the 9th of May, the year 2018. From us here in studio, it is indeed welcome to this edition of the show that will be coming to you from several different places, including here in Nairobi in studio. We will also be speaking to you from Kigali, from the ongoing Transform Africa conference, besides, of course, bringing you an update on other stories that will be making business headlines and indeed have been making headlines all during the day, earlier on the day, and of course to speak to you about what exactly has been happening at the markets. Well, to get the ball rolling, we of course want to take a quick look at the markets, but before I do that, just to introduce the studio guest that I have with me. This of course is Tony Sugden. He is a man who, well, runs a company called Insight. It is a company that is an expert in things around, well, risk mitigation and that sort of thing. But that is later on in the show. First, of course, to bring you up to speed on the markets and take a look at what exactly they have been saying to us. Well, we start off with a look at the currency pairs. As usual, the dollar shilling pair, they're pegged at 135.35, 100 flat, 0.56 buying and selling levels respectively, while the sterling pound is pegged at 135.55, 135.85 buying and selling levels. The euro, 118.97, 119.24 buying and selling levels respectively. That, of course, is the financial market. Of course, the rates pegged there are brought up to us by the Central Bank of Kenya. It will differ slightly depending on which commercial entity you do walk into. Well, let's look at the NSE itself. Turnover, 668 million shillings worth of shares bought and sold in the last trading session. Shares traded 31 million. Counters, NSE 20 share index pegged at 3658.91 points. While bonds traded, this of course is bond turnover, 2.5 billion shillings for the previous trading session. Well, the active stocks, these are the counters that have been driving those trends that you've just seen there. Britam, Safaricom, Barclays, and Kenocobel. Britam moving 41.12 million shillings worth of shares. Safaricom, 15.76 million counters bought and sold. Barclays, 7.60 million. And Kenocobel, 3.28 million shares bought and sold. Well, what are the winning stocks? These are the bulls of that trading session. Total, Mumias Sugar, Serena, TPS, and Williamson Tea. Now, Total trending upward 6.87%, bullish on the day to 35 shillings flat. Mumias Sugar up 6.25% to 85 cents, while TPS Serena trending upward 6.25% to 34 shillings. Williamson Tea pegged at 159 shillings flat, upwards, trending upwards 5.30% on the day. Well, what have been the losing stocks? These are the bears of that particular trading session. East Africa Portland Cement, Crown Badger, Flame Tree Ventures, and Kenya Re. East Africa Portland down 9.71% to 23 shillings 35 cents. Crown Badger down 5.88% to 80 shillings flat. Flame Tree Group down 4.76% to 4 shillings. And Kenya Re trending downwards to the tune of some 4% to 18 shillings flat. Well, that has been a look at the barometer of the entire, well, securities and financial markets. It is a barometer of the entire economy. Now to the stories of the day. But before that, again, to introduce the guest we have in studio, Tony Sugden, the man at the helm of a company that goes by the name Insight. It is an expert in risk mitigation, enabling organizations to work in different places that are considered hazardous. He is here to talk to us about his work and what exactly his organization has been able to achieve in East and Central Africa. But that, of course, will be later on in the show. First off, to bring you up to speed on the stories that have been making business headlines thus far. And we want to start off with the biggest story of the day. This, of course, is Safaricom, which has announced today, Wednesday, that its profit for the year ended March 2018 grew to some 55.3 billion shillings compared to the 48.8 billion shillings achieved the year before on the back of M-Pesa and data revenues. Now, this represents a 14.3% growth of its full year after-tax earnings. M-Pesa revenue grew 14.2% to some 62.9 billion shillings, while mobile data was up 24% to 36.4 billion shillings over that period. Now, of course, it has also been announced that the chief executive of Kenya's largest telecommunications firm, Bob Collymore, will be making a return to the helm of the company. In a video message shared to the staff and shareholders, he said that he is awaiting medical clearance to travel back to the country. Now, staying with that story, while speaking to investors while presenting the results Wednesday morning, Safaricom Chief Finance Officer or CFO Sateesh Kamath said that the board had recommended a dividend payout of some 44.1 billion shillings. That is an increase of some 13.5% over and above the form of the previous year. Take a look.
Starting with drought at the beginning of the year, which impacted the prices of unga, which impacted in turn the consumer wallet significantly. Further accentuated with the situation with credit growth being one of the lowest in 14 years, with the interest rate cap bill causing some hardships in the SME segment, the uncertain regulatory environment, prolonged elections, all of which came together in the same year.
There was a slight drop in our market share. Now, we have never spoken about that, but the position is as follows. Because when you have people making it difficult for our dealers and for our agents to work, that is really not acceptable. We'd really want that politics be away from business.
Well, Safaricom Strategy Director Joseph Ogutu there commenting on, of course, the outcomes of the political period last year when a sort of boycott was called on the company's products, and indeed clarifying that it did affect their performance and nibbled into the market share. Right there. Now, moving on and away from that story, the 5th edition of the Digital Dialogue Conference, a thought leadership platform facilitated by MultiChoice to foster a better understanding of the future of video entertainment industries, just concluded in Dubai in the United Arab Emirates. This year's theme was how digital has changed lives and the prospects of the third industrial revolution for Africa. Between today and Friday, we will be bringing you snippets of that conversation made by the various presenters at that event. And we start off with MultiChoice's entertainment boss, Jolisa Fale, who has a warning for Africa's TV industry, saying that the TV business across the continent will have to do more to engage better with viewers who have more and more free content choices available than ever before, as shiny substitutes like Netflix, YouTube, and Facebook proliferate. She is the CEO of the General Entertainment at MultiChoice and spoke at that conference recently.
Our world has changed because historically, you know, if you were in Kenya or if you were in Nigeria, your main competitors were other Kenyan newspapers or other Nigerian broadcasters. The internet has changed all of that, and it has basically opened up the world to our audiences. So now we have to compete with the best in the world, and we can do that, but we just have to realise that, you know, that things have changed, and basically it's up to us to continue to make sure that we give our audiences what we want.
Indeed, the industry has had to face various realities, including, of course, the fact that video on demand is what is currently driving that industry. Now, delegates attending the 4th edition of the Transform Africa Summit, that is an annual continent-wide tech gathering in Kigali, in Rwanda, are advocating the advancement of an African single digital market. In the following conversation with KTN's Eugene Nangwe, Dr. Hamadoun Toure, the Executive Director of Smart Africa, shares more on the summit, why the African single digital market should be seen as a facilitator of economic integration in Africa and the rest of the world, and the role of the private sector in achieving this ambition.
As you know, in our manifesto, one of the key principles is, one of the 5 principles is private sector first. Giving the opportunity to private sector will, because they have the means, they have the technology, and they have the investment opportunities. If we develop the right PPP models, private sector will be able to develop also entrepreneurship, which will in turn create jobs for our youth. And there's no other challenge that we face today bigger than youth unemployment.
You know, you talk of developing proper PPPs, and the question would be, what sort of models would you want to see in developing these right private-public partnerships in order to have the private sector plug into, you know, the Smart Africa manifesto?
Well, we want to give opportunity for private sector to evolve first. And for that, you need to create the necessary legal and regulatory framework for them to evolve, and to evolve in a larger market, larger than their own individual countries, at the regional level or the continental level. That will make them bigger. Where private sector cannot invest, and there are some areas where they may not necessarily see it as a profit-making, government may come in, trigger the demand, and have a public-private partnership with them so that they can start working, and later on private sector can take over completely.
Right. We understand that this year's theme for Transform Africa Summit is accelerating Africa's single digital market, and some people could be wondering, why this focus? Why now? I mean, especially when it comes to looking at the acceleration that you want to see happening in this single digital market.
Timing is perfect. As you know, as I said, we've signed, our heads of state have signed the free trade agreement, but this decision of this theme was taken last year at the summit in May last year. You see, this shows that timing is perfect. Creating a single digital market for Africa is key for us to attract industry, to attract the manufacturing industry, to create opportunities for softwares to be developed in Africa, to give opportunity for our young entrepreneurs to be more creative, to give opportunity for women to exercise their full right of being part of this digital revolution. The market size of $1.2 billion, which is over $3.4 trillion GDP combined, that's a very huge market force. I'm talking about the ICT industry alone. And this market force will be able to drag the other sectors of industry, from health, e-health, education, e-education, agriculture, I mean, you name it. All the sectors will benefit from a single digital market in the ICT sector.
So the bottom line here is tapping into the opportunities that we already have here. But talking of the kind of conversations that we should be expecting during this summit with regards to this theme, what sort of discussions, what sort of practical points that you could be able to tell us that you should be expecting to see during this summit?
We're expecting to see the digital economy as a theme that will be discussed here. What are the goodies that are coming with it? And what are the challenges we are facing? What are the regulatory environments that we need to put in place to attract more of that? We're talking about e-health. It will be very widely discussed. We have invited the Director General of WHO and some other specialists. We have invited ministers of finance so that they'll be here, because we'll be talking about digital money, cryptocurrency. We are inviting women leaders as well, because we want to give a big importance to women in this field as well, but youth will be our biggest asset in this conference, because we are going to create opportunities for entrepreneurs. We're going to trigger more startups in the continent, so that in turn they create opportunities. There's more creativity on the continent. We're going to assist them in terms of intellectual property rights, because when these young people innovate, we need to make sure that their discoveries or their inventions are protected intellectually, so that they can benefit from it. And all of those will be happening during this summit.
Indeed, an interesting conversation there coming out of Kigali. The move towards an Africa-wide, indeed, Pan-African single digital market that will also lead Africa into a smart economy at the same level as the continental-wide free trade area. Now, South Africa's fashion brand Mr. Price is set to take full ownership of its outlets in Kenya after buying out the Deacons franchise operations in East Africa that started in the year 2007. Deacons was previously the exclusive local franchise holder of Mr. Price clothes brand and Mr. Price Home. Mr. Price is now set to take full control of the subsidiaries, setting the stage for complete autonomy from Deacons. Deacons will be compensated for ceding control of that franchise. Now, proceeds from this sale will go towards funding ongoing operations, launching an e-commerce platform, and the launch of a Deacons house brand and store expansion of the other international brands in its portfolio. Mr. Price's plans for Kenya's fashion market are not immediately clear, but the multinational is now expected to develop and run its own retail outlets.